welcome. You're watching Business Today Television. I'm Sakshi Batra and this is BTS. That's Behind the Scenes, a show where we share a sneak peek into the latest edition of the Business Today magazine with all of you viewers. Joining in on the show with me are Anand Adhikari, Managing Editor of the Business Today magazine, and also in the studio right here in Delhi, I have with me Rahul Oberoi, Assistant Editor of Research at the Business Today magazine. Welcome to both of you and thank you so much for taking the time out for this fantastic discussion, and everybody, for all of you who are waiting to hear and see what this new edition will have for you. Well, this is a glimpse that you can really see, and of course you recognize this face very well. Vijay Shekhar Sharma, founder and CEO of 197 Communications, and of course this is after Paytm has been at the helm of discussion. A lot of things have unfolded in the recent past. So the question everybody really wants to know is, where does Paytm go from here? And that is what we have attempted to answer for all of you viewers. So straight with you, Anand, of course this is the question that everybody wants to know, that where does Paytm really go from here? This is after RBI has punctured Vijay Shekhar Sharma's led Paytm's banking ambitions, so to speak, with Paytm's Payments Bank getting at the under the lens of the RBI. Do tell us, where do you see Paytm headed from here? What are the kind of changes Paytm will have to do? And can it really weather the storm without the banking partner, so to speak?
Thank you, Sakshi. I'll straightway dive into the question, where does Paytm go from here? First of all, structurally, let's understand, the Paytm ecosystem. OCL, this 199 Communication Limited is the holding company, for Paytm. And within that, there are dozens of subsidiaries and associate entities. Paytm Payment Bank was part of the associate entity of the, OCL. Now, what has been impacted? Now, let's see, what happened, under the Paytm Payment Bank part. Now, the wallet was housed under the Paytm Payment Bank, and that is gone now. And RBI and the NPCI now has given a permission, to OCL, for a TPAP license, the third party application provider, just like, we have Google or the Phone Pay. So today, on a Paytm app, if you want to pay bill or buy a movie ticket, you can do it. Now, they have that license, from the NPCI and the RBI. Second, the fast tags. The payment bank was selling, fast tags. So, and that was all sold, via the Paytm app or the OCL. And now for that, they have tied up with SDFC Bank. So that is also in a way, sorted out. Number three was the merchant acquiring bank. Again, PBL was the merchant acquiring bank for OCL. So now, they have tied up with Yes Bank, for acquiring, merchant, because you need a banking partner. And finally, the fourth was a nodal account. Earlier for OCL, the nodal account was PBL. Now they have a nodal account, with Axis Bank. So all these four major partnerships are now settled with the third party bank. Now what will happen, let's say in terms of the revenue loss, because they have to renegotiate. Now earlier the arrangement was with PBL, now the arrangement is with the third party banks. So there will be some revenue loss here. Now coming to the OCL, broadly, they have three businesses. The payment part is there, the financial services, and third, the marketing business. Part of the payment we have covered here, which was in a way had a direct linkages with the associate entity, Paytm Payment Bank. The other side of the payment part was the device strategy. So Paytm was installing, a lot of sound boxes and EDC machines, which is a subscription kind of a model. And this is what they have done in the last 2-3 years, because UPI business, if you see, is a very low margin business. So they shifted to a non-UPI strategy, which is this device strategy. Now, coming to the device part, the challenges, which Paytm will now face. Number one is the Jio and the Bajaj Finance. Both these players are now rolling out their devices in the market. Both have deep pockets, they have a war chest. So tomorrow, Paytm is going to see a lot of headwinds in this business also, because they are going in mass, in the market. Second, device business require capex, because these are machines. Whether it's EDC or whether it's for the sound boxes. So the capex requirement for Paytm, will go up tomorrow if they want to compete aggressively with, Jio and Bajaj Finance, or even the normal course of business when they will install, the capex part, will go up. Now coming to the financial services part, they have loans and they have the equity, the discount brokerage, and they also distribute insurance. Now the loan business, which is totally unsecured, they were doing with some 8 NBFC partners. And of late, you have seen, the overheating the market, RBI coming out, with the requirement for risk weights. So that business is also, in a way slowing down. Now, the only, way left to make money in this business is to do higher ticket size loan. So currently, the Paytm was doing less than 2 lakh kind of a loan. So they have to move fast, to do higher ticket size loan where they can also partner with banks. So that is, going to be a big challenge, for Paytm. Number 2, the entire concentration, for Paytm or the OCL in the last few years was in the unsecured side. And when this overheating happened, the entire business got impacted. So they have to diversify, let's say, into the secured side, which the company is also, planning to do. And the third part, is the marketing business where, they also sell, credit card, for partners. So they have 2-3 partnership, with, SBI, SDFC, the Kotak Bank, and they also do ticketing and, other things in the marketing business. So marketing part is not much affected. The loan is severely affected. Payment is also majorly, impacted. So this is the way I see, the big impact which is going to happen in the Paytm business.
Okay, so that's as far as the impact is concerned. Now, considering Paytm investors who have been holding on to the stock, but they haven't seen real returns since the IPO, especially in the last 6 months or last 3 months or from the time this situation emerged, the stock has really nearly halved its value for investors. It's now trading at almost 1/5 of its listing price as well. The big question that all the investors are grappling with right now is that should they exit this company or should they consider buying afresh at these levels? Will there be a ray of hope soon, and will Paytm be able to bounce back? What are the kind of things that you'd like to tell them?
So Sakshi, in any financial services business, the final or the ultimate aim for any player is to, get a banking license. Now, with the banking license or the payments banking license gone, and RBI have a lot of issues on the KYC side, it's going to be a very challenging for, Paytm to get maybe a small finance bank, or let's say maybe in future to get a full scale banking license. But in any banking, any financial services business, you make money if you manufacture the product. Today they are distributor of loan. They are not the NBFC or selling loan from their book. So if Paytm is going to be a distributor tomorrow, the margins and the yields are going to be very low in this business. So I'm sure investors will now reevaluate their investment thesis in the OCL. And now second, let's say tomorrow if Paytm wants to get into let's say mutual fund manufacturing, so they have to go to SEBI for that license, or for that matter let's say life insurance or a general insurance. So again they have to go to a financial services regulator with KYC issues here. It is again is going to be very challenging to get the other BFSI licenses. So that I see as a big challenge for investors going forward. So they have to reevaluate their strategy, whether they want to invest in a business where the possibility of getting a license or a possibility of manufacturing financial product tomorrow is very, very challenging. And number 2, if Paytm wants to scale up, like I said earlier, if they want to compete aggressively with Bajaj Finance and the Jio Financial, they have to do a lot of capex on the Soundbox and the EDC side. The kind of valuation they are enjoying today, the share price is already 1/5. That will result in a huge dilution in the equity. And the company already is not making any profit. I mean, they have made, it's EBITDA positive, but on the PAT side is still making losses, and with the payment bank gone, I'm sure the PAT is still maybe 1, 2 or 3 years away. This. Now again, if like I talked about the the payment side. Now on the financial services, moving from let's say the postpaid buy now pay later or the merchant loan. Now if they want to move to higher ticket size, again they need partnership there because they have to do with banks. And why will bank partner with Paytm Bank? Because they have to offer some propositions there. So I see a lot of challenges for OCL, and I suggest or I advise their better story outside rather than investing in Paytm right now, because there are a lot of challenges.
Lot of challenges, and profitability is still a distant dream for this one, and of course one will have to see how the journey goes ahead for this digital payment poster boy once of all. When we had seen demonetization take place, digital payments and Paytm had become almost equivalent stories to talk about, but of course the biggest body blow has been delivered by the RBI to Paytm as far as payments bank is concerned. But the way forward will be extremely important for us to track, and which we will for all our viewers and readers as we go forward from here. Let me now bring in Rahul into the conversation as well, and a very interesting insight that one viewer and reader will get from this edition is with respect to the portfolio management services. This part of the stock markets which have gained actually enormous traction over the past many years, especially with Indians getting wealthier, more and more super rich getting added into the kitty, more HNI investors also emerging from India as well. Rahul, first of all, tell us, how have you seen the PMS industry growth over, if we want to track last 8-10 years odd, and where do we go from here, especially with this background that I just spoke?
Sure, Sakshi. Thank you for inviting me on your show. So, as you said, HNIs are rising in our country. So, this high-end product is also rising. I'm calling it high-end product because you need minimum 50 lakh to invest in this product. So, in the last 8 to 10 years, as you asked me, so at present the AUM of PMS industry stands at 6.24 lakh crore, which is growing at 20% CAGR since FY15. AUM of PMS industry was just 1.16 lakh crore in FY15. And going ahead, market analysts are positive on these figures. They are saying that AUM will multiply from here onwards, and they have the reason to, as they believe that household income of individuals with $10,000 and above will be more than 50% compared with 50% by 2031 compared with around 26% in 2021. So the outlook is looking good and bullish for PMS industry.
Okay, got that. So that's as far as the outlook is concerned on the PMS industry. But do tell us, for somebody who may be, wanting to now be a part from and take benefit of the PMS industry at present, what is the kind of historical data that can actually give them a better sense of information? Which have been the alpha generators when it comes to PMS strategies in India, which have given maximum returns in India?
Sure. Sakshi, I will divide my answer in 2 parts. Firstly, I will tell you that how PMS schemes have delivered return in the past 1 year. So if we talk about biggest wealth creators, so schemes like Inva Asset, LLP Growth Promax Fund, Asit C Mehta Investment, Ace Multicap, Green Lantern Capital LLP's Growth Fund, and Samviti Capital's PMS Active Alpha Multicap. These schemes have delivered 98% to more than 100% return to HNI clients in the last 1 year. Means they have doubled investors' money in just 1 year. Means if they invested 50 lakhs in, last year, it is around 1 crore at present. And if we talk about long term, say 10 years, so there are schemes like Equitas Investment Consultancy India Opportunities Product, and Master Portfolio Services, Master Trust India Growth Strategy, and Globe Capital Markets Value PMS. So these schemes have delivered more than 25% CAGR kind of return to investors in the past 10 years. So schemes have delivered mind-boggling return in the past 10 years and 1 year also.
But for sure, this is for the wealthier Indians at large, a story which has been successful and more to come going forward. In case you're interested in understanding the insights from the top PMS managers, then we have taken some exclusive interviews right here, including Devina Mehra of First Global as well. So you can definitely get all of those insights from this newest edition. Well, on that note, thank you so much, Rahul, and thank you so much, Anand, for being with us on the show and giving us such wonderful insights from this newest edition edition. And with that, I urge all our viewers to please go out there. The magazine edition has already hit the stands, and grab your copies, because this one definitely has enough and more for you, and for as fodder for thought as well. Many thanks for tuning in, viewers, onto this very special edition. But do stay tuned, as Business Today Television will continue to get you all the action from the world of business and finance.